It is a fixed number of Bitcoin, so no more will be created once it reaches that number.
Right. You know what's fascinating about the asset, and it's not intuitive because it's so rare, is that, to your point, it is definitively scarce. So if everyone in the world wanted an iPhone, Apple could make more. If everyone in the world wanted a McDonald's cheeseburger, McDonald's could make more. The fact that Bitcoin cannot increase its supply means the new supply comes from the market. If you want more Bitcoin, you don't go to the Bitcoin factory to get one. You have to go up in price. Is there enough Bitcoin for me at 120,000? No. Okay, 130, 140, 150. So I tell you what, there's always Bitcoin available. Just depends on what you're willing to pay for it. And so what I think will happen is this price will continue to discover higher because Bitcoin is the scarcest thing. It's inelastic to the amount of demand that searches for it. So the amount of buying power that we're seeing from the capital markets, from the ETFs, and potentially from nation states like the United States, I think they'll find the supply they're looking for. They're just going to have to go get it at a higher price.
Following Jerome Powell's announcement that interest rates will not change, President Trump releases the eagerly anticipated report on digital assets, claiming it marks the beginning of a golden age for the cryptocurrency sector. With Bitcoin at the forefront of this study, Jack Mallers offers his analysis of the market dynamics and price movement that might make 2025 one of the most significant years for the cryptocurrency to date. According to Mallers, CEO of Strike, Bitcoin already accounts for 1% of global wealth. Furthermore, he believes that the road to $1 million per coin is now more obvious than ever. According to Mallers, Bitcoin has reached the tipping point, solidifying its place in international banking and paving the way for widespread institutional adoption. He claims that the next all-time high will be more than simply a figure on a chart. Rather, it will signal a significant shift for the Bitcoin community and the direction of money in general. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Is there a long-term strategy here, like to take over Strategy's role as the biggest holder or maybe even the second biggest holder and push Mara out of the way?
Of course. I mean, listen, I think the capital markets will get to know me as many things, one of which is a competitor. I'm never going to sit up here and say I want to be second. So I think us at 21, we have a lot of confidence that we can do pretty much anything. The board, if you think about, consists of myself, Tether, and SoftBank. That's a lot of access to capital, a lot of technological experience, a lot of Bitcoin experience. So we're confident. First step is getting approved. Bitcoin is the new hurdle rate. Can you be performance in Bitcoin terms? And the message I want to give to our existing shareholders and future shareholders is we want our shareholders to get wealthier in Bitcoin terms. And so instead of measuring earnings per share in dollars, we want to measure in Bitcoin. Can we grow the Bitcoin per share that you're exposed to as a shareholder of the business? That's why we created the metric. I think what makes us different than a lot of these other businesses is we plan to build Bitcoin products as well. I mean, the founding group is Tether and myself. I founded and lead Strike is one of the bigger Bitcoin financial services firms in the world. Tether obviously is one of the most impressive companies in the history of humanity, but specifically in building massive cash flows within the space. So Paulo and I, before we were CEOs, we were engineers. We built a lot of products. And so we plan to not only acquire as much Bitcoin as possible, raising capital in all sorts of deep capital pools, but also build products, build technology, build tools. I think when people eventually think of 21, it's are they a competitor to Coinbase? Are they a competitor to Strategy? For us, why not both? We think we have that potential.
It is a fixed number of Bitcoin, so no more will be created once it reaches that number.
Right. You know what's fascinating about the asset, and it's not intuitive because it's so rare, is that, to your point, it is definitively scarce. So if everyone in the world wanted an iPhone, Apple could make more. If everyone in the world wanted a McDonald's cheeseburger, McDonald's could make more. The fact that Bitcoin cannot increase its supply means the new supply comes from the market. If you want more Bitcoin, you don't go to the Bitcoin factory to get one. You have to go up in price. Is there enough Bitcoin for me at 120,000? No. Okay, 130, 140, 150. So I tell you what, there's always Bitcoin available. Just depends on what you're willing to pay for it. And so what I think will happen is this price will continue to discover higher because Bitcoin is the scarcest thing. It's inelastic to the amount of demand that searches for it. So the amount of buying power that we're seeing from the capital markets, from the ETFs, and potentially from nation states like the United States, I think they'll find the supply they're looking for. They're just going to have to go get it at a higher price. Little background on my opinion, okay? Us humans own a little over $900 trillion worth of stuff. Currencies, sovereign debt, real estate, precious metals, fine art, all of the things that we collectively own as a species. About half of that, so call it $400 to $500 trillion worth of it, we're using to save money. Right? You own the $10 million art painting not to put on your wall so your toddler can throw spaghetti at it and ruin it. You own it because you want to sell it for $11 million in the future. You own the real estate not to consume it because you're living in it, but because you're trying to save and build a real estate portfolio. So that the amount of wealth humans have created that they want to bring with them tomorrow and save into the future is about $400 to $500 trillion. To me, that's what Bitcoin's going after. It's that pristine store of value. It's that pure money, right? What is Ethereum? What is Dogecoin? What is Solana? To me, I don't know. At best, a technology. Are these things going after Apple, Amazon? If they are, let's go out and give Ethereum credit that I don't think it deserves and say it's going to achieve what Amazon has achieved. Okay, $2 trillion, $3 trillion worth of value to society. Reasonable, nice, a new cool tech stock, and that's if they go on to achieve that. If Bitcoin goes on to achieve a small fraction of the $400 to $500 trillion that humans are looking to bring with them tomorrow, we're talking about tens of trillions of dollars of appreciation. So it's in orders of magnitude larger problem Bitcoin's going after. It's in orders of magnitude sounder bedrock to build a treasury. I do not want to build a treasury on potentially the next Amazon. I want to build a treasury on the new gold, on the new sovereign debt, on the new currency, on the new dollar. So that for me, our shareholders should know I will never own another asset outside Bitcoin.
The increasing adoption of Bitcoin by prominent organizations, governments, and the media indicates that its worth is becoming more widely acknowledged. However, Mahler says this is just the start. He claims that we have entered a new stage in the development of Bitcoin, drawing comparisons between its early, grassroots days and the current increase in interest brought about by significant investments and attention paid to Bitcoin ETFs. By obtaining regulatory clearance for ETFs, Mahler cites BlackRock, under the leadership of Larry Fink, as a major force in bringing Bitcoin into the mainstream of finance. He contends that actions like these not only validate Bitcoin, but also demonstrate its durability and potential as a formidable hedge against currency devaluation. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Bitcoin purist, or maxi, as Tim just reminded us. Jack, you call yourself the first ever Bitcoin native company that expects to be publicly listed.
We want to do what's best for Bitcoin and our shareholders. We're open to all relationships that help us achieve that. That's our banking partners, that's the exchanges. I mean, for us, it's about being performant in Bitcoin terms and serving the Bitcoin network and growing alongside of it. And yeah, for us being a Bitcoin native business, again, we didn't pivot from an old business model. We aren't a company that needs a new direction. We are Bitcoiners. We've been in this space for over a decade, and so we're native to our metrics, to our core, to our operating business, and that's what we mean. And whatever partners along the way, exchanges, banks that want to support us on our mission, I'm happy to work with them.
Beyond just buying and holding, that this is a useful technology.
Well, I think the use case for Bitcoin from the highest level possible is I've created value and I want to keep it. That's it. I got a chuckle out of you. That's true. I got up out of bed. I sacrificed. I worked. I commuted. I did tasks. I created products. I created value for those around me. I want to keep that value.
But even though it's called a cryptocurrency, it's not used widespread as a currency. It's used as something that will accumulate, or that people think will accumulate in value.
Yes, I think the definitions of currency and money and how we think of medium of exchange, store of value, I think it gets too complicated. And sometimes Bitcoin is so simple that people don't believe it can be that simple. The reality is money is what you acquire in exchange for your effort, your time, your energy. It's our time and energy in an abstracted form. And I exchange my work hours for it so that I can later get the stuff I need in my life. I want to go to Whole Foods and get a steak. I want to go on vacation. I need to pay rent. That's what money's for, is to allow me to create value and take it with me tomorrow. And that's the use case. And today, it's increasingly difficult to achieve that. I can't save it in dollars. We all know that. Okay, you're going to force me to understand Japanese central bank monetary policy? You're going to force me to understand what tech stocks to pick? No, how about something that's definitively scarce, no one can inflate, I can store for free, I can move cheaply, and that I can put it in my brain. And that's the use case, and we all have that use case. Nation state, corporations, families, individuals. Simply put, I think everyone can find value in a technology that is open source and solve that for everybody.
Are you guys following me now? That's it. Because the last logical conclusion I come to is that Bitcoin is the sink for stablecoin liquidity. So stablecoin's the sink for fiat inflation liquidity, and Bitcoin is the sink for stablecoin liquidity. Do you understand? If you want stablecoins to grow, Bitcoin grows. You want to debase the dollar against something? Bitcoin. Put it to you this way. The United States sends Bitcoin to $500,000 a coin. That's 5x from here. Stablecoins then have to 5x in growth. At least. That's 5 times the amount of demand for US debt. Guys, I'm telling you, this is it. I'm telling you, I feel it in my bones. I really do. So then my next few slides are to support this idea. For one, The president and his family just bought $2 billion worth of Bitcoin. This is the Trump media company. Just bought $2 billion worth of Bitcoin. Next, huge news. Trump opens U.S. retirement market to crypto investments. Guys, if I were to execute this plan, the one thing I would need for it to work is for everyone to own as much gold and Bitcoin as possible.
In the simplest terms imaginable, Jack Mallers explains the goal of Bitcoin. You put in a lot of effort, produce value, and you want to hold on to that value. That's all. Simply said, money is a tool we employ to save the outcomes of our time, effort, and energy so we can utilize them later to purchase necessities or desires. The issue is that saving money in dollars isn't as effective as it once was. Your purchasing power is reduced by inflation, and traditional finance requires you to manage intricate markets, central bank regulations, and hazardous investments in order to protect your wealth. Bitcoin alters that. It is rare, impossible to duplicate, inexpensive to keep, portable, and you can even commit your private keys to memory, allowing your riches to essentially reside in your brain. For this reason, according to Mallers, Bitcoin is beneficial to everyone from families and individuals to businesses and even whole countries. Additionally, he links stablecoins to the rise of Bitcoin, elucidating how stablecoins serve as a link between Bitcoin and conventional cash. Bitcoin thrives if stablecoins do. And with significant actions like the family of the U.S. president purchasing a total of $2 billion of Bitcoin and new regulations allowing crypto investments in U.S. retirement plans, according to Mallers, this is now a calculated financial strategy that is being implemented in real time rather than just conjecture. And you'll see why he believes, with complete conviction, that this is the time where Bitcoin solidifies its position at the core of the global financial system if you understand how the parts fit together. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.